Welcome to the Valuation Desk by Highland Global, where SBA business valuations speak bank. In this session, we're diving into a critical valuation concept that shapes SBA 7A lending decisions. The difference between the going concern and liquidation premises of value. This isn't just academic. It determines how we value businesses, justify loans, and ensure deals make sense for buyers and lenders alike. Let's start with the basics. A going concern premise assumes the business keeps running for the foreseeable future, maintaining customers, suppliers, and cash flow. It's the default for most SBA 7A business acquisitions, as the goal is to finance ongoing operations. A liquidation premise, on the other hand, assumes the business shuts down and its assets are sold off, either in an orderly fashion or a forced fire sale. This applies in cases of distress, insolvency, or when operations just aren't viable. The premise you choose drives the valuation methods you use. For a going concern, we lean on the income approach. Think capitalizing free cash flow or building a discounted cash flow model. The market approach can also work if we have comparable business sales. Occasionally, the asset approach can be used for a going concern premise. Think construction companies with expensive, heavy machinery. But in liquidation, those methods don't apply. Instead, we use the asset approach, adjusting the book value of assets to their liquidation value. This might include appraisals for real estate, equipment, or inventory. Let's make this real with an example. Picture a small manufacturing company. Its cash flow is weak, declining revenues, aging ownership. The income approach, capitalizing cash flow, gives us a value of $500,000. But then we look at the assets, machinery, inventory. An asset-based analysis shows a net realizable value of $850,000. Now what? We ask three key questions. Can the business keep running under new ownership with a solid plan? Is the buyer planning to operate it or just flip the assets? Would the market really pay $850,000 in a liquidation scenario? If there's a clear path to keep the business running, we stick with the going concern premise, even if the income value is lower. But if operations aren't viable, we might shift to liquidation, though that often triggers extra scrutiny. Now let's talk about intangible assets, because this is where things get tricky. Even if a business is struggling, some intangibles might still have value. Things like FDA registrations, trademarks, proprietary software, or liquor licenses. But here's the catch. For SBA 7A lending, we use fair market value. That means intangibles only count if they're legally transferable, independently marketable, and valuable to a hypothetical buyer, not just one specific competitor. Strategic value to a single buyer doesn't cut it. And things like goodwill or franchise fees? They're usually worthless in liquidation, or if the business is losing money because they depend on future cash flows that aren't there. For example, a failing health supplement company might have FDA approvals and a trademarked brand. A competitor might want those, but unless there's a broader market of buyers willing to pay for them independent of operations, their fair market value is likely zero for SBA purposes. To help lenders navigate this, we've got a simple decision tree for assessing intangibles when there's no free cash flow. Let me walk you through it. Step 1. Is the business generating positive free cash flow? Yes? Consider intangibles under a going concern. No? Move to Step 2. Step 2. Are the intangibles legally transferable and separately identifiable? No. They have no fair market value. Yes? Go to Step 3. Step 3. Is there evidence of market demand beyond a single strategic buyer? No. No supportable fair market value. Yes? Keep going. Step 4. Can the asset be monetized independently of the business? Yes? You might justify value using licensing comps or salvage value, but document it. No. Don't include it without rock-solid market data. This framework keeps us grounded in SBA's fair market value standard and prevents overvaluing distressed businesses. Applying the right premise isn't always straightforward. Here are some challenges you'll face. Unclear viability. Figuring out if a business can keep running is tough when revenues are dropping or losses are piling up. Scarce data. Getting reliable market data for liquidation values, especially for intangibles, is hard and often requires extra analysis or additional appraisals. Buyer intent. If a buyer wants to liquidate assets, that might clash with financing ongoing businesses. So how do you tackle these? Here's what to do. Ask for clear reasoning. Ask borrowers to justify the going concern premise with evidence, like their qualifications or a solid transition plan. Verify asset values. insist on professional appraisals for tangible assets. Check SBA alignment. Make sure the valuation matches the buyer's intent to operate the business, not just strip assets. Look for transparency. Expect valuation reports to include a clear explanation for the chosen premise. Here's what you need to take away. Stick with the going concern premise for most SBA valuations. Only use liquidation when there's strong evidence the business can't continue. Be skeptical of intangible values. Only count them if they're transferable, marketable, and backed by data. Goodwill and franchise fees are usually worthless without cash flow. Make sure the valuation uses the fair market value standard. Understanding the premise of value, going concern, or liquidation is key to making sound SBA lending decisions. It protects your portfolio, ensures compliance, and keeps deals grounded in reality. Thanks for joining us for this episode of the Valuation Desk. When you need clarity, confidence, and credibility, experience makes all the difference. At Highland Global, every appraisal is backed by decades of expertise and thousands of completed reports. We don't just crunch numbers. We provide insight, context, and defensible conclusions that lenders can count on. Whether it's a business acquisition or equipment appraisal, our seasoned approach helps ensure your deal moves forward with precision and trust. For more information on valuation-related topics, be sure to visit our website, highlandglobal.com. Lenders know experience matters most.